Hello, today we are going to find out which is the best blockchain ETFs of August 2022. Blockchain forms the backbone behind cryptocurrencies like Bitcoin and Ethereum. Though its applications are much broader, they could potentially revolutionize any industry where records must be kept and beyond. For those interested in investing in these technologies, blockchain exchange tradable funds, ETFs, allow you to easily invest in hundreds of firms pursuing blockchain-based strategies without having to worry about the underlying technology. In order to help investors navigate this new category of ETF products, Forbes Advisor has reviewed blockchain ETFs currently available on the market and filtered them by total asset under management, AUM, which measures how much money an ETF manages. Bitwise Crypto Industry Innovators ETF, BITQ. Why? Because the Bitwise Crypto Innovators ETF, BITQ, is a passively managed ETF that tracks the performance of an index of 30 cryptocurrencies and blockchain technology companies. This index includes 30 companies that are deeply involved with cryptocurrency markets, including crypto miners, mining equipment suppliers and finance companies. To qualify for inclusion in the Bitwise Crypto Innovation Index, a company must earn at least 75% of its revenue from cryptocurrency or have 75% of its net assets invested in Bitcoin or another cryptocurrency. Companies in the index accounted for 85% of BITQ's holdings. The remaining 15% include other major cap stocks that are tangentially related to crypto or hold at least $100 million worth of Bitcoin, Ether or another crypto asset. As of August 2022, the top 3 holdings were MicroStrategy, MST, Silvergate Capital Corporation, SILV, Coinbase Global Incorporated, GDAX. Global X Blockchain ETF, BKCH. Why? Because the Global X Blockchain Index Fund, BKCH, invests in companies positioned to profit from the growth of blockchain technology. This may include crypto mining companies, crypto exchange operators, and companies developing new blockchain solutions. The fund typically holds a concentrated portfolio between 25 and 40 pure-play blockchain companies. As of July 2023, BKCH's top 3 holdings were Marathon Digital, MARA. Marathon is a digital currency miner. Riot Blockchain Incorporated, RIO. Riot is the world's largest Bitcoin mining operation. Coinbase Global Incorporated, COI. Coinbase is one of the world's leading cryptocurrency exchanges. Siren Nasdaq Next Gen Economy ETF, BLCN. Why? Because the Siren Nasdaq Blockchain Economy ETF, BLCX, was launched in January 2018. BLCX tracks the Nasdaq Blockchain Index, which includes the shares of companies that develop blockchain technologies or use them for their own business. BLCX offers a very well-diversified portfolio of boldface names that are involved in the cryptocurrency industry. The fund currently owns 64 stocks, and of the 10 largest holdings none account for more than 5% of net assets. As of August 2022, the fund's top 3 holdings were Marathon Digital Corporation, MARA. Marathon is a Bitcoin mining company. MicroStrategy Incorporated, MSTY. MicroStrategy develops cloud computing solutions and owns a large amount of Bitcoin. Core Scientific Incorporated, CSCO. Core Scientific is a crypto mining company providing net carbon neutral blockchain infrastructures in North America. Amplify Transformational Data Sharing ETF, BLOK. Why? Because the Amplify Transformations ETF was the first exchange-traded fund dedicated to investing in blockchain technology. This actively managed ETF, launched in January 2018, aims to invest in the stocks of companies that are developing and using blockchain technologies. Block targets crypto exchanges and companies that are involved in crypto mining and developers of new blockchains. As of June 2022, Block's top holdings in the blockchain industry include 37% transactional, 16% crypto miners and 13% venture. As of August 2022, the top 3 holdings of Block are MicroStrategy Incorporated (MSTR), Cloud Computing Developer, Silvergate Capital Corp SI, bank that provides crypto businesses with specialized financial services. Overstock.com OSTK, online retailer accepting Bitcoin as payment. First Trust Skybridge Crypto Industry and Digital Economy ETF, CRPT. Why? Because the First Trust Skybridge Crypto Industry and Digital Economy Fund, CRPT, was launched in September 2021. Its aim is to invest at least 80% of its net assets in cryptocurrencies and blockchain technology companies. One interesting aspect of the fund is that one of its founders is former White House Chief of Staff Anthony Scaramucci. He says that we believe that cryptocurrency adoption represents the biggest macro trend since the commercialization of the Internet, and we are excited to offer investors access to a portfolio of the leading companies in this ecosystem. In addition to investing in cryptocurrencies, the fund also invests in blockchain technology companies. As of August 2022, its top 3 holdings were MicroStrategy Incorporated, MSTR, Cloud Computing Developer, Coinbase Global Incorporated, COIN. Coinbase is one of the world's leading cryptocurrency exchanges. Galaxy Digital Holdings Limited GLXY. 2. Galaxy is a Canadian digital asset management firm. VanEck Digital Transformation ETF, DAPP. Why? Because the VanEck Global Digital Asset Investment Fund, DEX, also known as the VanEck Digital Asset Exchange ETF, DX, is an actively managed fund that was launched on April 1, 2020. DEX tracks the performance of the iShares FTSE Xinhua China 25 Index Fund, FXI, which holds the stocks of Chinese companies active in the cryptocurrency and blockchain industry. DEX owns 18 stocks, split pretty evenly among technology companies and financial services companies. It's important to note that the VanEck Global Digital Assets Investment Fund has good exposure to international companies, with 30% of its holdings based abroad. As of August 2022, its top 3 holdings were Marathon Digital, MARC. MARC is a Bitcoin mining company located in the United States. Coinbase Global Incorporated, CGBN. CGBN is a cryptocurrency exchange. Riot Blockchain Incorporated, RBLT. RBLT is currently operating as North America's largest Bitcoin mining facility. Fidelity Crypto Industry and Digital Payments ETF, FDIG. Why? Because launched in April 2020, Fidelity Crypto Industry and Digital Payments ETF, FDIC, is benchmarked to Fidelity Crypto Industry and AMP Digital Payments Index. This index tracks performance of global cryptocurrency, blockchain and digital payment companies. FDIC currently owns 35 stocks, with 64% of those stocks in technology industry and 32% in financial services sector. This means FDIC skews a little bit towards the crypto industry part of its mandate. As of August 2020, FDIC's top 3 holdings were Block Incorporated, Square. Former Square, Block is a leader U.S. payments platform. Coinbase Global Incorporated, COIN. Coinbase, a cryptocurrency exchange. Marathon Digital Holdings, MARA. A Bitcoin mining company generating cryptocurrencies exclusively in the USA. Methodology. There are presently 22 blockchain and Bitcoin ETF approvals by the U.S. Securities and Exchange Commission, SEC, for trading in the U.S. This includes ETFs that trade in both publicly traded blockchain companies and Bitcoin futures contracts. Our methodology for selecting the funds included in this list was as follows. Avoid funds trading only in Bitcoin futures versus publicly traded blockchain companies. Filter the remainder of funds for those with more than $10 million in total assets under management, AUM. This process left us with 7 funds. There are more blockchain fund filings awaiting SEC approval. As the market for blockchain ETFs evolves, we will provide a more comprehensive methodology that chooses the best from an even greater universe of similar funds. What is blockchain technology? Blockchain is a distributed ledger that stores data about financial transactions. Each transaction is recorded chronologically into a block, which is then linked to previous blocks. Once a block is added to the chain, it cannot be altered without altering every subsequent block. Because of this, the blockchain is also known as a decentralized public record. In addition to storing data, the blockchain can also store smart contracts, which are self-executing programs that execute specific tasks upon certain conditions being met. These tasks can include transferring funds between two parties, issuing tokens, voting, or even executing a contract. What are blockchain ETFs? Blockchain ETFs are theme-based exchange-traded funds, ETF, that own the stocks of corporations that use or develop blockchain technologies. They tend to invest a wider variety of assets than Bitcoin ETFs or crypto ETFs, which focus more narrowly on tracking the price of specific cryptocurrencies. While cryptocurrencies like Bitcoin and Ethereum are the most popular use of blockchain today, the technology has the potential to serve a wide range of applications that goes far beyond crypto. Take Walmart's Canadian division, which used blockchain technology to create an automated payment system for its logistics partners. The ETFs listed above invests in hundreds of different companies. They can be broken down into 3 broad categories. Companies that own cryptocurrency. Companies like MicroStrategy and Tesla have large amount of Bitcoin and other digital assets on the balance sheet. Cryptocurrency exchanges and miners. Coinbase is a leading cryptocurrency exchange, for example, whereas Marathon Digital is a Bitcoin miner. Financial services firms. Take Galaxy Digital Holdings, which manages crypto assets that deriving their value from blockchain. Global banks, HSBC and BNP Paribas finance blockchain initiatives and are creating their own blockchain applications. Technology companies. Microchip makers like Nvidia Corp and Advanced Microrization are suppliers of hardware that is widely used in support of blockchain systems. Software companies. VMware, a leader in cloud computing, has blockchain-focused business. Why invest in blockchain and crypto ETFs? It's a buzzy, excited technology, but blockchain is just in the early stages of growth. Cryptocurrencies have made dramatic headlines for their outsized gains and tremendous losses. However, more practical blockchain applications have had a far lower profile. Large established public companies have dallied with blockchain businesses while smaller, focused firms have placed blockchain and crypto at the heart of their operations. Either way, there has yet to emerge a killer application that has made the case that blockchain should be a core part of the business and technology of tomorrow. This means investing directly in the stocks of just a few blockchain or crypto-focused companies is very risky. That makes choosing a diverse blockchain ETF the safest bet for investors seeking exposure to the industry. These funds invest in dozens or even hundreds of stocks, providing plenty of diversification in a single investment vehicle. Given how rapidly blockchain is developing, choosing a blockchain ETF may be the best possible choice to invest in the industry. Thank you for watching. Don't forget to subscribe and hit the bell.